We're going to talk mortgages for a moment now. It's probably been on your mind. It's been on mine. I think everyone's experienced theirs jump up a fair bit over the last couple of years. But you might have noticed news from around the world that actually interest rates are being dropped elsewhere. Places like Canada, the European Central Bank, talking about more cuts as well in the United States overnight. Some news which generally is positive for us, as the Federal Reserve has indicated that they might expect a drop before the end, or a cut in interest rates before the end of the year. But the weird thing is, all of these other markets that we tend to follow on interest rates seem to be going in a different direction to us. We're not really expecting cuts here anytime soon. In fact, some of the market bets really seem to be pointing towards interest rates going in the other direction, possibly another rate hike. Saul Eslake is a well-respected economist, an independent economist as well. He's on the line with us this morning. Good morning, Saul.
Good morning, Hamish. Thank you for having me on your program.
Can you just set the scene with what's going on globally? Because it is a bit different to what we're talking about, the tenor and the tone of the interest rate discussion here.
Well, as you mentioned last week, the Bank of Canada and the European Central Bank both cut rates for the first time since they started raising them in 2022. Prior to that, the central banks of Switzerland and Sweden had in late May cut their interest rates. They were the first central banks in the developed world to do it. Some central banks in the developing world, particularly in Latin America, who started raising their rates long before central banks in the developed world started raising rates, had been cutting theirs, but there's no sign of the Reserve Bank of Australia doing that anytime soon. As you said, there are some economists out there who are either forecasting or indeed arguing for increases in interest rates. They are very much in a minority, and I guess, saying this as someone with a fair bit of experience in this space, that's one way of getting yourself noticed, is to make a forecast that seems outrageous. But, frankly, I think I'm more likely to see a thylacine on my front lawn of a morning than I am to hear that the Reserve Bank has raised rates again. Okay, so you think some of this is economists showboating a bit, but is it fair to observe that maybe the climate for interest rate cuts in Australia is a bit different to what it is overseas at the moment? Yes, absolutely. And there are two reasons for saying that. The first is that although interest rates have gone up a lot here, they haven't gone up by as much as they have in all the countries where you can legitimately compare Australia with. So, and additionally, we were the second last central bank in the developed world to start raising rates. So the Reserve Bank of Australia didn't start raising rates until March 2022, and since then it's raised its cash rate to 4.35%, as I think everyone knows. But in the US, where the Federal Reserve started raising rates in March, it has raised them to 5.375, 5.38%.
Can I just jump in on that though, Saul? Because isn't there an argument that actually, because of the way mortgages are structured in Australia, that our market is a bit more sensitive to rate hikes than what it is in the US, because mortgages are written there often for the lifetime of the loan, whereas here the rate, even if you have a fixed rate, is only for 2 years or a year or maybe 3 years?
That's absolutely correct. And that is one reason why the Reserve Bank hasn't raised rates as much as not just the US that I mentioned, but just to round that off, in Canada and the UK, the cash rates were 5%. It's now 4.75 in Canada. And over the ditch in New Zealand, the cash rate is 5.5%. In New Zealand, fixed rates mortgages are more common than they are here, but they're typically only fixed for 1 to 3 years rather than 30 years as they are in the US. So, yes, one reason why the Reserve Bank hasn't raised rates as much here is because people with mortgages feel the effects of the Reserve Bank's decisions much more quickly than they do in the US and other countries. But there's another important factor as well, and that is that the Reserve Bank has made a different choice from its peers in those other similar countries as to how quickly it wants to bring inflation down. Okay. They have said quite explicitly now, most recently by the new Deputy Governor of the Reserve Bank, Andrew Hauser, who comes from the Bank of England originally. They've made it quite clear that the Reserve Bank has made a conscious choice to tolerate inflation being above its target band, that's 2 to 3%, for longer than its peers in other countries are willing to tolerate inflation being above their respective targets, in order to hold on to as much as they can of the gains that were made in reducing unemployment and underemployment to what had previously been thought unattainable levels of less than 4%, without sacrificing that. Now,
so on that, the Reserve Bank is relatively aligned then with the Treasurer, Jim Chalmers, who has this idea that you can kind of thread the needle. You can have your soft landing without letting unemployment jump up and all the other associated issues that might come with it.
Well, it's not a risk-free calculation, but essentially, yes. So, I mean, again, to compare Australia with Canada, which, is a legitimate thing to do because there's no economy in the world that is more like Canada, more like Australia than Canada is. Canada raised its rates earlier and by more than Australia did, as a result of which its inflation rate, which peaked at 8.1% at the end of 2022, has come down to 2.7, whereas ours has come down from 8.4 to 3.6. Or if you look at it in terms of the underlying inflation rates, which central banks do, Canada's has come down from 5.5 to 2.7. Ours has come down from 7.2 to 4.1. So Canada has brought inflation down more quickly to lower levels, but they paid a price for that. The unemployment rate in Canada has gone up from 4.8% at its lowest in 2022 to 6.2, whereas ours has gone from 3.5 to 4.1. So there's a trade-off here, which the Reserve Bank has made differently from its counterparts in Canada, the US, the UK, and New Zealand. The risk is that by tolerating inflation being above their target for longer than its peers, there's a risk that inflation might become entrenched, and ultimately that would require either higher interest rates in the short term or the current level of interest rates for a longer period in order to bring it down again. But so far, the trade-off which the Reserve Bank of Australia has made seems like a reasonable one to make.
So can you give us any good news or hint of good news? When can we expect these damn mortgages to go down?
Well, I have had the view since November last year when the Reserve Bank last raised rates, and thinking about what they said when they raised rates at that time, which many people hadn't expected. I've had the view since November last year that the Reserve Bank wouldn't cut rates at all this year, and that the earliest time to expect a rate cut would be February next year. Part of the reason for saying that, in addition to noting that the Reserve Bank had made a slightly different choice about how quickly it wanted to get inflation down and what price it was prepared to pay in terms of tolerating higher unemployment. The other factor that the Reserve Bank is surely taking into account is that from the 1st of July, Australians are going to be getting tax cuts that in aggregate, in terms of their impact on total household cash flows, is equivalent to 2 25 basis point reductions in interest rates. Now, people in Canada, the US, New Zealand and the UK and in the continental Europe, the Eurozone, they're not getting tax cuts. And the central banks in those countries take that into account in making decisions about when to cut rates, in the same way that the Reserve Bank takes account of the fact that Australian taxpayers are getting tax cuts.
I'm talking to Saul Eslake, the independent economist. Another topic we've been talking about this week is climate policies and climate wars coming back. Some suggestion that Peter Dutton may not keep Australia committed to the 2030 target that we currently have if the coalition wins the next election, and may also not commit to a 2035 target, which we're supposed to do under the Paris Agreement. What would be the implications for our broader economy even if we're not on track to meet them as they stand, if we let go?
Well, it would do some damage to our international reputation because we have made commitments under international treaties to achieve stated reductions in our emissions. And if we repudiate those commitments, there might be some consequences. One of them could be that the EU and the US are contemplating imposing what they call carbon border adjustments on imports. That's it, a kind of tariff.
A tariff?
On imports from countries that fail to meet their Paris commitments. Now, that won't affect our trade with China, who are our most important export market. They're not talking about doing that. But Japan, Korea, Europe and the United States could potentially impose tariffs on imports from Australia, especially imports of products that have high energy intensity in them or in other ways embody a lot of carbon emissions. Maybe Donald Trump, if he ends up being president of the United States next year, wouldn't do that because he has a similar view about the Paris Agreement and climate change targets to the opposition in Australia. But Trump has said he's going to impose tariffs of 10% on imports from everywhere, presumably including Australia as well, irrespective of what they do on climate change. So I don't think the prospect of Trump winning the election should make Australians any more relaxed about the potential consequences of walking away from the international commitments that we have made.
Saul Eslake, great to chat to you. Thanks for giving us some of your time this morning.
That's a pleasure. Thank you for having me.